You know what's wrong with most divergence indicators? They show you dots or arrows, but you never know when those dots really mean something. And that's exactly why traders end up jumping into reversals too early, or fading pullbacks that never actually finish. This indicator changes all that. It doesn't just mark divergence, it combines wave geometry and momentum decay to show you only the meaningful divergence patterns that matter, real ones that come with structure. In this video, I'm going to show you this powerful tool, explain exactly what appears on your chart and why it matters, and give you a complete strategy for long and short setups you can start using today. To add this indicator to your chart, open TradingView and pull up any market you want. I'm using the 30-minute time frame here, but this works on all markets and all time frames. Click indicators and type in Vidubis Divergence Wave Pattern Generator V1. Then make sure you select the one by Vidubis. Once it's added, you'll notice patterns and labels appear directly on the price chart, not in a separate pane somewhere. You'll also see a small dashboard box in the corner that shows you whether bulls or bears are currently stronger. Nothing here is random, everything you see has a specific meaning. Now let's talk about what you see on the chart. This script scans for 4 distinct pattern types, each one based on geometry and physics. When a pattern is confirmed, it draws a colored shape and label right on your price chart. The first pattern you'll notice is the standard reversal pattern. These appear as a series of connected lines, like an X, A, B, C, D formation, and are colored green for bullish or red for bearish. This pattern doesn't appear just because price made a high and then a lower high. It appears only when the indicator detects 3 momentum peaks, matching price highs or lows, and the middle ones are weaker than the first. That's the divergence physics the indicator uses. You'll see these patterns only when price geometry and momentum both agree there's a likely reversal forming. In other words, these are divergent signals with real structure, not random dots you'll regret later. Now, before we get into the actual strategy, let me share something that changed how I trade. You can learn this setup perfectly, but if you're not at your screen when it triggers, you miss it. And that used to happen to me constantly. That's why I started automating strategies like this, back-tested setups that run whether I'm at my desk or not. These work across forex, futures, gold, and they even work at prop firms. If you want access to the exact strategies hundreds of traders are already using, check the first link in the description. The next pattern is called the climax reversal, and you'll see it colored in orange on the chart. These show up when momentum doesn't confirm the move, but then suddenly fails a sudden shift that tells you the previous trend might be running out of steam. These patterns often signal smart money exits or traps where retail traders get caught. Then you have rounded top/bottom labels, navy or maroon, which show up when price compresses and momentum decays smoothly across 4 consecutive waves. These tell you price isn't making sharp pivots, it's rolling over or basing, and that can tell you something important about the next move. And finally, there's a purple pattern called the predator. This is not a reversal pattern, it's a trend continuation pattern. It appears when price makes a higher low in an uptrend, but momentum makes a lower low. That's hidden divergence in favor of the trend. When this shows, it tells you the pullback is likely ending and the trend will resume. Now let's talk about the dashboard in the corner. This box shows you who is currently stronger, bulls or bears, based on recent momentum peaks. When the box is green, buying pressure is dominant. When it's red, selling pressure dominates. This dashboard is your safety filter. If you see a bearish pattern but the dashboard is strongly green, that's a warning you might be fading a strong trend. If you see a bullish pattern with a red dashboard, same thing. You want pattern signals aligned with dashboard strength. Now that you see the signals and the dashboard, let's get your settings right. Double-click the indicator to open the settings panel. You'll see inputs for fast length, slow length, signal length, and look back. These control how sensitive the divergence logic is. The original settings used by the author, 8 for fast, 21 for slow, 5 for signal, and 3 for look back, are a good starting point for most markets and timeframes. These settings help the indicator catch patterns without getting overwhelmed by noise. Now let me show you exactly how to trade this. Long setup. First, you want a bullish reversal pattern to appear on your chart. You'll see a green pattern drawn with labels and connecting lines. At the same time, look at the dashboard in the top corner if it's showing green or neutral. That means buying pressure is not weak. That alignment is your first clue. Once the pattern is fully drawn, which means the final pivot is confirmed, wait for price to make a higher low after the pattern completes. When that higher low forms, that's your cue to take the long. You put your stop loss below the swing low that formed during the pattern, because if price breaks that low, the pattern has failed. For take profit, you can target the next obvious swing high or structure level on the chart recent resistance, or the next obvious pivot, because that's where traders often take profit or stops cluster. If the dashboard turns red after your entry, then you manage the trade by tightening your stop or taking partial profits. Short setup. Shorts are the mirror. You want a bearish reversal pattern red drawn fully on the chart. Check the dashboard. If it's red or neutral, then selling pressure is not weak. Once the pattern is complete and price makes a lower high after it completes, that's your entry signal. You place your stop loss above the swing high from the pattern. Targets are the next obvious swing low or demand zone where price may react. If the dashboard flips green after you're in, then you manage the trade similarly by tightening stops or taking partial profits. If you're a serious trader trying to get funded, you need more than a single tool. You need a full toolkit consisting of elite algos that catch the best moves while avoiding losses in sideways markets, proven strategies across multiple markets, whether forex, gold, or futures, with a risk management built in, and fully automated systems so you can trade without being at the screen all day. So if you'd like to stop burning your time and account testing random indicators and start using elite tools and automation like all these other traders, click the link below. A signal without context is not a signal. Now let's tune this for different markets. For forex, the original settings 8, 21, 5, 3 work well on major pairs, especially during London and New York sessions when momentum patterns are cleaner. For crypto, patterns can fire quickly, so you might tighten look back to 2 or lower time frames, but always wait for the full pattern to complete before entering. For stocks, signals are cleaner on higher time frames. Don't scalp patterns unless you confirm them with structure and volume. For gold, divergence patterns hit harder, so you want the dashboard aligned strongly before taking a trade. If you want to trade divergence that actually aligns with price structure and momentum, this indicator gives you exactly that. No guesswork, no random dots, only patterns that matter. Thanks for watching. I'll see you in the next one.